Earlier today, as soon as the market opened at 9:30 a.m., I was ready with my buy button. I bought about $50,000 worth of stock. In this video, I'm going to be sharing what I bought and what exactly I plan to do with it. Let's jump right in. As you can imagine, especially if you've been following the last video around me selling my Tesla shares, I got assigned last week on 200 Tesla shares that I have to give up. And that yielded me about $52,000 because I had to give them up at $260. So you just do the math, 260 times 200, and you get 52,000. In terms of what I wanted to buy with this money, there was a couple of different options. So I want to be able to go deeper into that options game and actually be able to sell covered calls and learn more strategies. And over the weekend, I was reading up more about that because there's a lot of strategies that I could have utilized for Tesla to not get assigned. And I just didn't have the tools at my disposal. But at the same time, I wasn't afraid of getting assigned because I hadn't booked a gain in that company for quite a while. At the same time, though, I do believe that Tesla is still on an uptrend, and I think that it's going to go higher than here, especially after the election. I think that Tesla is going to do very well in 2025 with the margins where they are. And keep in mind, this is like my largest position in my portfolio. It's larger than SoFi. So I definitely wanted to have exposure to this company. And so the things that were going through my mind as to where I want to allocate that capital for this week was a couple of options. Number one, I thought about just buying 100 shares of QQQ and writing against that on a daily basis. That would yield me about $50 to $75 a day if I went at like a 10 delta. So something super safe and it would have a consistent stream of income. And I also thought about a couple of other alternatives, but ultimately I kept coming back to Tesla because I still think that there's going to be a run. Now, I had about 22 shares left over. So in this particular account where I did it, I had 222 shares just because I like the alliteration of numbers. 200 got called away. It had 22 shares. So I went ahead and I bought 78 shares of Tesla at the market. I think I bought it at like 269 or 270, something to that effect. And so I rounded up to an even 100 shares where I could write against that. And I did go ahead and write against that. I wrote a $295 call, and I think I got about $100 worth of premiums for that. So I do have a covered call now on my Tesla position at 295. My cost basis is also lower because I had the initial cost basis on those 22 shares, and the 78 shares that I bought at 270 brought my cost basis way down to, I think it was 240 or 250, something like that for my cost basis. So that's what I did with about $20,000 worth. Now, the other amount, $27,000, I went ahead and bought 2,000 shares of TSLL. Now, this is the Tesla double leverage. This one, I really like the premiums. I think you can squeeze a lot of money from premiums on this one. It's more aggressive and it allows me to make more leveraged moves because I can buy 2,000 shares as opposed to buying 100 shares of Tesla. So I can get more premium out of it. And then if I get called on these, I don't really mind, right? Because I'm not going to be holding TSLL on a long term basis. Although I did realize for the first time today, as I was looking into it, that TSLL actually pays a dividend, which blew my mind because I've been asking myself, why am I holding Tesla this entire time? I could be holding TSLL instead. Anyways, I bought 2,000 shares of TSLL for about 27,000 or $28,000, something like that, right at market open. And I wrote 20 contracts against that for TSLL, $16.50 expiring this Friday. And that was 12 cents a contract. So you could do the math. It's about $200 worth that yielded me. So right now, this money is sort of put to work, and I'm kind of okay regardless of what happens. Like if Tesla goes to 295 and I don't roll and I get assigned at 295, well then that's great. I just got assigned last week at 260, so I don't really mind it. If TSLL gets assigned at 1650, that's great. I make like a $4,000 profit and I get to keep the premium. So I'm not really fussed about that. Although I do have now these options at my disposal for if I want to roll or if I want to, extend that time period out a little bit longer, I can do that. Or if I want to close out ahead of time, I'm not afraid to do that either. But I really like the exposure to Tesla because on the flip side, if Tesla were to go down, I still do have some dry powder. I can pick up more shares. That's not a problem. And at the same time, I mean, this is my biggest position. This is a company that I've been holding for like 4 or 5 years. And so if it were to go down, it's not the end of the world for me. I also think because of the high volatility that Tesla and especially TSLL have, that if the stock were to go down, I can still yield a pretty healthy premium off of it from the spreads, right? I'm just looking at 4 days until expiration. For example, Tesla's trading at 268, 267 right now as I'm recording this video, and I'm looking at a strike price that's over $30 away for 4 days until expiration, and I'm still getting a healthy premium off of that because the stock is so volatile and so unpredictable and moves in such crazy swings. So I do think that if Tesla were to fall, let's say to 250, then I can still write 285s, 275s, whatnot, and still make a lot of premium because of it, because Tesla's such a volatile stock and I'd be covered on both sides. And then if Tesla were to fall more, or if TSLL were to fall more, I can pick up more shares because I am keeping dry powder on the side. And so that's really my thought process around that. But I ultimately realized on Friday, after I got my shares assigned, I said, well, I'm okay with locking in profits, but I do think that there's more upside here. And I don't want to leave a lot of those gains on the table. And so I essentially double dipped and came back into Tesla and in TSLL for the first time ever, because that's going to be way more leveraged and it's going to be more bang for my buck. And so the way I see this is it's good either way, right? Because for this week, if I don't get assigned, then great. I can pocket, $400 in terms of premiums and then write weeklies again the next week. And if I do get assigned, then that's fantastic as well, because I made a very healthy profit for this week. And if the stock goes down, well, I just keep the premium and I can just write the next week again for a slightly lower strike price, but I'm still doing well on that money, because even if I write 1450s on TSLL or 15s on TSLL, I'm still in the green in terms of whether I were to get assigned, that would still make a profit, but I'm still covered because of that volatility. I could still get a great premium off of that, even if TSLL were to go down to, let's say, $12 or $11. And if it goes down further than that, well, that's when I then deploy my dry powder and I lower my cost basis even more. So we'll see what ends up happening. It's kind of interesting that, from getting my shares assigned, I ended up double dipping in Tesla and ended up having an even more aggressive position in Tesla through the TSLL exposure. But I'm really enjoying writing calls. I'm really enjoying a lot of the comments that people have been putting, in the last video, and I hope that it keeps up for this video. And the reason why is because my broker doesn't allow me to do cash secured puts, but you guys found a way around that of, writing calls very deep in the money and then letting them get assigned and essentially using that to collect the premium to serve as a synthetic cash secured put. I could have done that this time around. I could have just bought Tesla shares and written 250s, against it and collected all that premium to serve as a cash secured put, but I didn't want to because I do think that there is more upside ahead. Of course, I think Tesla might have a pullback this week, but I really like the premiums that I'm getting from just going up a couple of rungs on that options ladder. So right now I do have covered calls on Tesla for 285, for 295, and I also have about 20 covered calls for TSLL at 1650. All of those are expiring this week. I also have cash secured puts on another account from another broker on Amazon for 180, and I have covered calls on SoFi for $13.50 expiring this Friday as well. That's all the options plays that I'm doing this week. So I hope you enjoy this video and let's see how it works out this time around. Hopefully I don't get assigned 2 weeks in a row, but even if I do, I'm totally happy getting assigned at these levels because I have a better, more familiar understanding with options, right? This is me dipping my toes in for the first time. If you do enjoy these videos, I know some of my audience might enjoy the options videos, some might not, but if you do, please let me know and I'll keep making more updates like this on what am I doing from an options perspective. Thanks so much for watching. I'll see you in the next one.